2 weeks to closing, and they were hiding critical information from me the entire time. Let me take you back. A lawyer referred me these clients. The situation was urgent. They were 2 weeks from closing. They bought a new place a few months ago without their current home being sold. Their realtor told them that this would be fine, that once they purchased, they could put their home on the market and get it sold. When they approached their bank told them that they can only hold one mortgage per customer, so they can't help them until their home was sold. And they have not been able to sell that home. Oh, and they're also out of the country on vacation. So we're working across time zones, early morning calls. I'm moving everything around to make this a priority because the clock's ticking. If they can't get the financing to close, they just won't lose the deal. They'll lose their deposit and they could get sued. We start going through the questions and all of a sudden the tone starts to shift. Their answers are vague, not specific, not the kind of answers you'd expect from someone who's desperately in need of your help. And then out of nowhere, even though we've already been talking for a while, they start asking about privacy and they start asking about how their information is going to be shared, and they start to ask about qualifications and experience. They want to understand the process again, things that we've already covered. That's when I knew something wasn't adding up. I ask for paperwork and suddenly the brakes go on. They won't sign anything. They don't want me to pull credit. They want to talk more first, but without the paperwork, I can't actually do anything for them. And then they start to ask for another meeting, and then they want their financial advisor on the call. That's when the whole picture finally comes out. They're already talking to a bank about a first mortgage. They've already spoken to a private lender about a second mortgage. What they actually want from me is to see if they can circumvent a policy with the bank that has the first mortgage. They have a clause on their mortgage approval that they don't allow any secondary financing attached to their mortgages. The private lender advised them of this, and they want to know if I allow it or know a way around it. A week gone, a little over a week to closing, and I'm just finding this out now, that they've been working other angles this entire time, and it's hurting their cause, not helping them. An entire week wasted. Let me explain why this matters, because most people don't understand what actually happens behind the scenes when you're trying to get financing in a complicated situation. First, the second mortgage issue. In this scenario, when you have a first mortgage approval, but it is not enough for how much you actually need, without the first lender giving you permission, you cannot go and just register a second mortgage behind them, even if you get a second mortgage approval. It's the same case for when you already have a mortgage with a lender and you want to put a second mortgage behind that first mortgage. The first lender has to give permission. But in this situation, most people just go ahead and get the mortgage done, and at registration, the lawyer sends the lender with the first mortgage a note to ask for permission. And most of the time, this permission is granted. But it isn't always a guarantee. If the first lender says no, the second mortgage can't happen regardless of what anyone else is promising you. So when a private lender tells you that they can get you a second mortgage, the very next question should be, does the first lender know and have they agreed? Because if they haven't, that promise from the second lender or from anybody, it means nothing. Another thing that matters is whether there is actual room for the second lender. A lot of the banks that register their mortgages as collateral charges, they register for more than the value of the house. Legally, you can register for up to 25% more of the value of the home. What this allows them to do is save on legal fees if you ever need to add more money when you do a refinance. The idea is that the value of the house goes up over time, and this saves you on legal fees. That's what the lender that's doing this will tell you anyways. What they don't tell you is what happens if you don't qualify with them, because you have to still qualify for them to give you more money, even though they've taken this additional charge over the value of your total equity. We had a situation like this come up a couple of weeks ago, actually, where a client wanted to get a line of credit behind their first lender, and they would not qualify with that lender due to traditional income guidelines. The clients were business for self, and they don't declare enough money to the bank's liking. Now, even though they qualified for a very equitable B solution, we could not proceed because the original bank had written a charge for $1.73 million on the home when the home's current market value was $1.7 million, and they only owed the bank $700,000. So essentially, the bank has over $1 million on a charge that they're only offered out lending of $700,000. Now, in this scenario, the client was not even aware. And in most cases, clients are not aware of things because they aren't told about them. And really, it is our job to educate them. But we could not proceed with their line of credit until they went to the existing lender and asked them to lower the charge. Would they do it? Yes, they would, but it would mean more costs for you, more costs for the client. Now, if this client had come to us originally for the original mortgage instead of going straight to the bank, we would have explained all of this to them, and most likely this situation would have been avoided. But the bank doesn't have this obligation to you. They don't have to tell you these things. There's actually no way for you to hold them accountable. So we just saw how not knowing about this hurt this client and wasted their time and ultimately cost them more money. Let's go back to our clients who were withholding information and explain how this eliminated options for them. Withholding information in general can eliminate options by simply time going down the wrong road. Specifically in this situation here, the clients went to a lender and they got a first mortgage approval. But that amount that they got approved for was lower than what they actually needed. So they went to a private lender to get a second mortgage. And when they did this, they were informed that the second lender would not be able to go behind the first lender without the first lender's permission. Had I known from the outset that they were looking for a way around this, I would have been able to tell them the risks of trying to do this right away, right out of the gates, and give them the answer that they needed to hear. The answer is no. And I would be able to do this in a matter of minutes and not waste a whole week. Now the situation that we're in, we've blown a week, and the lenders that we have access to that are going to be able to turn this around in time are going to be more expensive. I can only go to lenders that fit the complete picture of your situation. Every lender has different criteria. Every deal has to be structured in a certain way. When I'm missing pieces, I'm working blind, and I might go down a path that wastes days only to find out at the end that a detail that you didn't share makes the whole thing unworkable. In a normal situation, that's frustrating. With 2 weeks to closing, it can be catastrophic. When you are on such tight deadlines, the stakes are high, and if you're not able to meet your closing date, your deposit gone. In some cases, tens of thousands of dollars. In this case, it is $70,000. But that's not all. There could and likely will be legal action from the seller because you signed a contract and you didn't fulfill your obligations of that contract. Damage to your credit because a failed closing can trigger collections and legal judgments. And above all of this, the home that you thought was yours, that you were excited to make your own, back on the market, not yours anymore. These aren't all hypothetical outcomes. They happen, and they almost are always avoidable. If you're in a complicated situation, come in early. Don't wait until 2 weeks before closing to reach out. Don't wait until you've already talked to 3 other people and try to cut corners. Don't wait until the situation is so tangled that there's barely room to maneuver. Come in early, lay everything out, tell your broker about the other lender, tell them about the existing loan, tell them about the shortfall, tell them about the plan that fell through. I don't need you to have a perfect file. I've worked with complicated, I've worked with messy, I've found solutions in situations that looked impossible, but only because I had the full picture early enough to work with it. The earlier you come to me with the truth, the more options that we have. The later you come and the less you share, the fewer options remain and the more expensive it gets for you. The fastest way to lose your deal isn't bad credit or income issues. It's not being straight with the person who's trying to save you. Find someone that you trust and trust them with everything, because I can work with complicated, I can work with messy, I can work with almost anything. What I can't work with is finding out the full story a week too late. And here's the other side of that. Just like I need you to be straight with me, I want to make sure that you're armed with the right questions on your end too. Because the truth is, your bank isn't always going to volunteer the information that protects you. There are questions that you should be asking that most people never think to ask, and your bank is hoping that you don't. I put together a free resource that breaks down the 4 questions that your bank hopes you never ask. It takes 10 minutes to go through, and it could save you thousands. The link's in the description. Grab it before your next mortgage conversation. I'm Aleem, and I'll see you on the next one.